Bryce, kicking things off with you on the economic agenda out of Washington. Democrats are looking to get something done. They say they have to scale back that $3.5 trillion spending package. They may use some gimmicks, including cutting the duration of some programs. President Biden now telling House Democrats he expects the bill to come in between $1.9 and $2.3 trillion. Bryce, your reaction to the drama in D.C. and its impact?
Well, as a bond investor, I'm just trying to figure out how this is going to affect the Fed. I mean, for the Fed, this is like got to be watching a horror film. Okay, they don't know how it's going to turn out. The greater the amount passed in terms of infrastructure, they're linking that to how much will be how much of a hit everyone will take in terms of higher taxes. Well, that's a net negative to the economy in the near term, and the Fed's going to have to figure out, well, what are we going to do about that? And then on the spending that you referred to, shortening up the programs doesn't do anything for the short-term impact, and bigger incentives to not work is going to just exacerbate the labor shortage and the labor problem that we have. And the Fed's like, well, what do I do about that? You know, do I raise rates? Do I lower rates? How are we going to get through this? And whether they shorten it to a 4-year kind of stimulus package versus 8, the immediate impact to us, you know, is now. And a lot of those programs, if they only get passed for 4 years, they're going to probably get extended. So it is a shell game, like you say, but it's hard to navigate what's to come.
So how do you navigate buying fixed income with yields moving up fractionally, even though we're still at rock bottom numbers?
Well, what's happening is
this morning.
Right. What's happening is you had this demand inflation push, but now that's flipping. Now that's becoming a cost push inflation. So if the Fed starts cutting back at all, all their spending and all of the fiscal spending has been suppressing the 10-year yield. If they start pulling back, and you're still left with this cost push inflation, which I think is going to get far worse, especially through Christmas. You're going to see a lot of bare shelves and upgoing prices. So that's where the curve's going to steepen. We like tips. The 10-year yield will continue to ratchet upward. And then sometime next year, the curve's going to flatten a lot because the Fed's going to flip. As soon as Powell's reappointed, he's going to start talking about taper in a big way and raising rates.